Hello traders, Gary Wagner here. Approximately 8 a.m. in Honolulu, 2 p.m. in New York, Tuesday the 27th day of March, and this is the daily report for gold and silver. We have the precious metals markets slightly lower this morning, trading off about $4.50 currently in gold. As you can see, current print 1685.16. Silver is off about 16 cents, and that is currently trading at 32.76, 32.67, right in that area. First chart that I do want to take a look at this morning, very, very short-term chart, candlestick chart. It is in a straight candlestick format, and what you can see here is as this market came up, this, of course, is yesterday's trade activity right in here. We had it form a little bit of base. Most of the evening session, actually, it was trading higher, as you can see, making a play, but not really getting anywhere at about 16.95 before trading lower. You can also see this hammer-like candle right here. It's followed by a red candle, so it's not significant in terms of seeing a potential support level and having this market move up, but it is trading within a range, and that range is nominally lower this morning. Traders, we are looking at a 360-minute chart. This is the chart that I've been using most frequently for our current Elliott wave count, and yesterday we talked about the fact that we did some upside projection for this impulse wave here. The impulse wave here, we're now in 3, and we're now in 1 of 3. So as you can see, I've gone ahead and added the current Elliott wave count, the 1 of 3, into the mix, into the chart. I've added it right here. Now, I need to also talk about this impulse wave with one caveat. In other words, what do we really need to see happen? Now, what I'm looking at right now is the fact that, as far as I'm concerned, it is very important. This top right in here, it comes in roughly at 1720. That's the real top that we need to be seen in terms of taking it out for absolute confirmation that we have absolutely headed into the impulse phase. Now, my current assessment and belief is that we have, and typically we want to wait for some sort of real confirmation until we say there can be no doubt, but it is absolutely my belief. You can see when we take a look at this market how nicely it broke out of this particular formation and what kind of a strong breakout we had to the upside. And really, all I believe that we're seeing right now is a small, minor, not even a correction, but a small round of profit taking as shorter-term traders that got into the market are exiting the market. Now, you do have the European stock market, which has posted the really, really strong loss last week, now advancing very, very strongly. So we want to take a look and see how the market reacts over the next couple of days. And really, what I believe that we're witnessing more than anything else is the euro really right now has a large fall, and that is strengthening the dollar, and that is what we're seeing in the gold market itself. We still have to take into account the comments made by the Federal Reserve Chairman yesterday, and that really moved not only the stock market because of the belief that interest rates are going to remain at a near zero level, but realized that gold had been holding above not only 100 but a 200-day moving average. So we hit a peak. The peak was just below 1700. A little backtracking, I'd expect some backfilling, and then for the market to reemerge on the upside. Traders, we're looking at our silver chart. This is in Henkin format, and as you can see, we still have a pretty solid set of greens coming in. It is signaling that this market itself has had a key reversal. Key reversal came in a couple of days ago. My recommendation, of course, is simply to maintain our long positions and to maintain our stops. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.